Welcome back inside of my screen, my amazing viewers. In today's video, I will be going to cover the most requested questions from my audience and my video consumers about higher time frame bias and drawn liquidity and total soup entries. So in this video, I'll be sharing insights on how to do a proper top-down analysis from the higher time frame all the way down to the lower time frame. So before we proceed, I would like to state some nuances about the higher time frame. I'll take that again. So before we proceed, I would like to take time to say some nuances about the higher time frame. So you have no business with the lower time frame if you don't have a clear conviction on what the higher time frame is saying. I'll take that again. As a trader, you have no business with the lower time frame if you don't have a clear conviction of what the higher time frame is saying. So with that out of the way, the next nuances is, why does price move? Like, if you see the price moving, why do you think price move? Now, this particular question, if you can answer that question now, looking for draw on liquidity on the higher time frame and all the way down to the lower time frame, it will not be a problem. It won't be a problem because you know why price is moving in the first place. So let me break that down. So when analyzing from the higher time frame, you want to ask yourself sensitive questions. So you need to know why price is moving in the first place. So if you know why price is moving in the first place and you come on to your chart to do analysis and you see the price moving up and down, you're not worried about why the price is moving up and down in the current price action, because you already know why it is moving and where it is moving to. Okay. Alright, so let's take some notes. So the question you want to ask yourself when analyzing on the higher time frame is why those price moves? Why does price move? So this question is very, very relevant on the higher time frame, because if you can answer this question on the higher time frame, then you know that on the lower time frame, price is going to be moving to those reasons. For those one or two reasons why price moves. So reason number one. So price moves in the market, like when you see the price moves up and down, it moves because it wants to take out liquidities above old highs and below old lows. I'll take that again. Price moves because it wants to take out liquidities above old highs and below old lows. So that's reason number one, price moves. So reason number one is price moves. Take out liquidity and below old lows. In brackets, buy stops. The order is being buy stops, and old lows being sell stop. So this is the first reason why price moves in the first place. So if you know that okay, price moves to take out liquidity above old highs and below old lows, then you're not going to be scared or be anxious why price is moving up and down in the lower time frame, because you know that okay, it's moving up and down in the lower time frame to attack a particular liquidity in the higher time frame direction. So reason number two why price moves is to do it is to fill up fair value gaps. Is to fill up fair value gaps in the marketplace, like FVGs, those pockets price left behind when it's moving to a particular drawn liquidity. Those gaps price left behind when it's moving to a particular drawn liquidity. That is the reason number two price is moving. So it is moving to either take out all highs above, it is either moving to take out liquidity above old highs, or is moving to take liquidity below old lows, or it is trying to balance those pockets being the fair value gaps left behind as it's trying to create those highs and lows. So reason number two, so price moves to fill up fair value gaps, FVGs, in price moves. Fill up FVGs left behind in price moves. So this is reason number two, price moves. So it moves to do it, price moves to fill up FVGs left behind in price moves. So this is reason number two, price moves. So now let's use these reasons and these questions to look at this whole picture in front of us, like look at this whole chart in front of us, and this is ADUSD 3-month chart. So if you look at this high here, after we took out these highs with this particular candle, now price was finding what's low momentum, like the volumes and the orders around here was beginning to reduce, like price was finding low momentum to keep moving to the upside, like be in a bullish momentum above these highs. So after we took these highs and we created this new high, then we created the low, and we failed to create a higher high above this high, failed to create a higher high, break above this high, then we broke this low here, and ever since then the interest from being bullish shifted to bearish, and we started attacking old lows, taking out the old lows. So this gives us the awareness that price moves because it's actually moving to take out its liquidity above old highs here, and once the old highs has been reached, the interest can shift from attacking old highs towards attacking old lows. As you can see here, old lows and old lows. That's reason number one. And also you can see this move up, this bullish move up, this impulse expansion move upward. Now price left pockets, gaps. You see these gaps, intentionally they left these gaps for future reference. So now when price is coming back, it came back to balance this gap here. So this fair value gap, price came to those balance it, like to close it, it came to fill it in. And you can see that immediately this candle filled the fair value gap and we started losing what momentum, and we're trying to come back to the highs, trying to come back to this short-term high here, because at some point, if on the lower time frame, this was a low and this is a high and this is a lower low. So price came back to this low and it failed to take out a low. It failed to take out this high, and also it failed to come into this fair value gap. Now let's look at this day move. How did this day move played out? So after we broke this low, found some consolidation around here, and we came back to this pocket, filling this pocket, because we've taken what liquidity above the old highs, and our price broke down, and we came back to tap into these old pockets, this fair value gap, before drop into the downside to attack the sell side liquidities, the sell stops below here and below here. So that's the reason why price move. So knowing this on your higher time frame, knowing that price moves for these reasons on your higher time frame, it will give you an edge over the lower time frame buyers. So when making your analysis, like when doing your analysis on the higher time frame, you have to be aware of these reasons why price move. Then and only then you can have calmness, like your state of approach will be calm on the lower time frame. Alright, so with this out of the way, let's go to the monthly charts and look at some things. So let me clear the charts and we'll take a look at the monthly time frame. So just forget about your entry model first of all. Just keep it aside and actually know why price moves first. Because if you know why it moves, then you can look for entry in the direction of why the price is moving, and you can frame entries along the way. So now this is the monthly chart of AUD/USD, and looking at this whole picture here, you see that what I explained is actually doing well, making sense. From this area, we rejected this old highs. So the liquidity is above these old highs. We broke and closed below these old lows. This is a clean expansion away from the old lows. So the interest has shifted from up here, from attacking old highs, like taking out liquidities above the highs, to doing breaking and closing below the lows. They are more interested in the liquidities below the lows. So after they created this low, they came up here, failed to take the liquidities above this high, and they broke this low to the downside. Price came back up, it took liquidity above the old highs, and ever since then price has been bearish. So it keeps convincing us that okay, price moves for those reasons, to take out liquidity above the old highs and below the old lows, and fill up caps. So moving on. Now, extra nuances you need to be aware of when looking forward. Buyers, your higher time frame buyers are one is the higher time frame buyers. Higher time frame buyers and narrative. Higher time frame buyers and narrative. Premium and discounts. Higher time frame buyers and narrative, then premium and discounts. Premium and discounts, key levels, key levels, total soup, and total soup all slash SMCs and lastly time. So these are the nuances you want to be aware of when looking for higher time frame buyers. So on the monthly charts, you want to be aware of what the higher time frame bias and narrative. Bias meaning the direction and narrative meaning why that direction. Then 2, you want to be aware of premium and discount prices. Then 3, key levels like your order block, your old highs and lows. And 4, now you want to look for what's total soup. Total soup simply means a fake move above old highs or below old lows, like this, just a fake pop below them and rally. So you want to look for what total soup or slash SMC. SMC is when price is failing to do it, to move above an old high. So when price is failing to create a higher high, is known as what's SMC. Something like this, price failed to move above this high here. And in the next positively closely correlated asset class, this is ADUSD. So NZDUSD, you see something like this, price created high and came back and pop above the high, which is the total soup and creating a low. So you're looking for what total soup in this case here, price took out the old high. Here. Then in this other case, SMC, price failed to take the old highs here. So that's what you want to look for. Then time being starting from the yearly chart. What year are we in? What quarter of the year are we in? What month of the quarter are we in? What week of the month are we in? What day of the week are we in? And what time of the day are we in? So that's all about time. All the variation, we look at time. So once you're aware of these nuances, then you can now frame a trade idea in strong conviction that it will have a higher probability of playing out than it won't. So let's kick off. Let's break things pretty much further. So now on this monthly chart, since we are rejecting the old highs and breaking and closing below the old lows, now what can we see here? So after we pop above this old high here and we broke and closed below this low, so the interest has shifted from what this bullish up move, rejecting old lows, to now rejecting what old highs. So my bias and narrative at this point in time has shifted from what price attacking the highs to what price attacking the lows, like taking out liquidities below the old lows. Now in this case, they are not just taking liquidity below the old lows, they are closing below the old lows here. So we have a close below here, below these lows, like, and here we had a rejection above this high. So this is the total soup, which is here. So now, why am I looking for these signs in price action? Because I'm trying to build a higher time frame bias. Now price is rejecting these highs here. We moved all this way from this down, move up, and took out liquidity, reasons why price moved. And after that, from this low to this high on this monthly time frame, there's no pockets, there's no FVJ to come and fill. Instead, they are just what lows, old lows here to be coming back to. Since price failed to keep moving above and breaking and closing above these highs, they rejected the high, so the lows will be the next drawn liquidity, and we should see price downwards, taking all of them out. After they took them out, they left pocket on the way down, and also they left important levels from this high to this low. They left important levels, so that is where your premium and discounts comes in. So in a clear example, it will look like this: price created a high, came back, took out the high, then broke the low, broke this low that took the high. So the interest from now on is now what's pricing, what's attacking the old low. So pop up a little bit and create a new low. Now we now have a range from this high to this low. We now have a range. So if we start seeing what retracement back into this price action like this retracement, now you want to identify what's premium and discounts between this high to this low, and you wait for price to come back towards premium. You wait for price to come back to premium, and you look for your trade setup to form around the premium area of this high to this new low, and you look for your setup to form around here. You look for what's key levels to be hit at the premium area here, and you look for what's total soup or / SMT around the premium area. Then you blend in some touch of time around the premium area to look for what to sell. So this move you're seeing here, rejection of these highs, breaking of the lows, and price retracing back to these premium levels here before dropping. I will explain that shortly. So with that said, now let's look at the weekly chart. So before going to the weekly chart, on the monthly, from this high to the lows, we are in what? Premium. You can see this black line is the 50% of this high to this low. So you can see that price is in premium, and we are hitting the premium key level, paying this up close candle, this big up close candle that took out the highs, and immediately the next move did what close below it is the order block. Price starts into the order block and rejected. So now let's look at the weekly chart. So going down to the weekly, and let's see what we have here. So zooming in to keep the charts a little bit presentable and clear in your eyes, you can see that what we have here is actually what's price respecting what's old highs. After they took liquidity above the old highs, immediately their interest shifts to bearish to attack the old lows, and eventually closing below the low that brought us all the way to this high. And after that, you can see price that retrace back into the range from this high to this low, and we're in premium. This is the tool, like my Fibonacci tool, that I use to identify premium and discount. So if we put it from the high, take it to the highest point here and bring it to the lowest point here, you can see that price is above the midpoint of it, which is around here. So I intentionally hide the 50% because I don't really need it, because at the 50% liquidities and consolidations are what's expected at the 50%, and sometimes the 50% can be used to create a high to break this low. But preferably look for your setups to form above the 50%, which is in this case. You can see that price came above the 50% into the premium area and tapping into this key level here, which is this low that broke this high before price started declining. So this is the key level. This particular candle is the breaker A breaker is simply where you have a old high, a low, a higher high, and a lower low. So price came back to this breaker, this particular candle. Yeah, immediately they closed below this here. If you can see, they came back to test it here before dumping. Now they came back again to that key level here, which is the breaker block here. Price came back to this breaker here. You can see how price tapped into the breaker nicely, and also this old high that was here, price took it out and tapped into the breaker and started declining. Then also this up close candle, or this up close candle is the other block, consecutive other block, immediately closed below the last, this first up close candle here, immediately closed below is all this up close candle is what other block. It will act as pure resistance. It will act as a pure resistance from the low all the way to the high. It will act as a pure resistance. You see price struggling to close above them, like to get rid of them. You see price struggling. So in this case, the key level price respected was the breaker block. Why? Because we have a high, a low, a higher high that took out liquidity, and we declined aggressively lower. So price respected the breaker at premium, in the premium area. So moving on. Now we have our higher time frame bias being bearish. The narrative is price is doing respecting the old highs, and we are attacking the lows. And premium discounts, we're in premium, and key level we've hit a key level, which is a breaker here. And now do we have turtle soup or /SMT? Now at this area, before hitting the key level, you can see that price created a high, came down, people sold around their early sellers, then they came back to take them out. Take out, yes, because price moved for the purpose of taking out liquidity above all that. You see how they came back to take out these highs before hitting the actual key level that they were interested to use to push price lower. So take out turtle soup here, and price started melting. So now on the weekly, if you're comfortable with entering on the weekly time frame, you can look for your entry signals around here as to enter. But I personally, I don't execute on the weekly. I execute from the hourly or 15 minutes. So my executions are done on the hourly time frame and the 15-minute time frame. So on the weekly time frame, if we zoom in here to look at this piece of this price action here, if we zoom in here, you can see that price created a high, then created a low. We came back and took the high, which is turtle soup that I've been talking about in my series, in my review series, my weekly trade review series, which is time and turtle soup price takeouts. At this time, we took out these highs here and we closed lower. So immediately price took out these highs and rejected these short-term highs here, and closed below this all close candle that took out the liquidity. Immediately we closed below it here. That's why you're seeing this red line. This candle did not close below the red line. It will close below it. This particular candle becomes an order block, and the 50% of the order block, since it's a big volume candle and we did not actually dump below it aggressively, we can reference the 50% to be a sensitive point, then the closing price of it, which is the rejection block, to be a sensitive point. And you can see how price closed below it next week, open and came back above the 50%, taking out this previous week high and rejecting. Then this week that just closed this, price came to the still came back, it's open around there, came to the came above the 50% and rejected. So now let's mark out the 50% of this range of this order block, which is somewhere around here, and we go to the lower time frame and we'll observe what happened around there. 50%. So alright, let's just mark it out so it's 50%, so, and keep the line there. So just give me a minute. Alright, the 50% came in at 0.666071. So that's the 50% of the order block. So we can delete this gray box and just focus on the red line. So now, since I've seen my reasons to be bearish from the higher time frame being monthly charts, weekly charts, now I'm going to the daily 4 hours and 1 hour to look for entries. And also now at this point is when you want to start looking for your entry model. Are you a weekly range trader? Are you a daily range trader? Or are you a 4 hour range trader? Is at this point you start looking for those ranges to trade. Now you can see that before this current week that closes, we had this beautiful bullish weekly range to trade against after we wicked above the high and closed back inside. It's giving us an early indication that price is going to be bearish for the following week, which you saw here. Price opened, expand higher at one point, then dumped aggressively, taking out the previous candle low. So this close window tells us that okay, there's potential for more lower prices, and you can see that in the next candle we opened, rallied higher, take out the previous candle high and reject. As the 50% is where all the rejection is happening at this other block. So now moving on to the lower time frame, I was expecting an open, rally, possibly take out these highs one more time again before dumping. So if we go to the daily time frame, excuse me, let's go to the daily. Now you see all those things we've been explaining, they will all now make sense on the daily time frame. So now on the daily time frame, price has hit the premium level. Let me make this actually clean. This premium. So let's shift it out to have a clean shades. Just give me minutes. Everything eventually makes sense. So just give me a minute. So that's premium, and let's go to the daily. So you can see now at this area, at this point in the daily charts, we are at premium, and premium prices we are above the 50% mark in premium. And now we've walked away from the higher time frame bias and narrative to premium and discount and key level, and now we are at turtle soup or SMC. So now we are seeing the turtle soup around this area on the daily charts. We are seeing the turtle soup from the weekly charts all the way to the daily chart. Now you can see that price took out these liquidities above these old highs, and the momentum, the bullish momentum, is slowly dying off, like it's reducing. And we had this pop above this candle here, and we closed below these two consecutive up close candle, which indicates what early bearish signs. So these two all close candles are what's bearish order block. They are bearish order block, and immediately price closed below them, leaving this pocket. You can see the aggressive decline, like aggressive dump in price, leaving this pocket. Then we pop above here a little bit into the pocket, into the gap, and we dumped one more time again. So this current week started here. This candle is Monday. This is Monday, start of the week that just ended, and you can see when it opened, we opened, and I don't even know how this candle started. But if we go to the lower time frame, we'll see it opened, came up immediately. Okay, we opened, gap down, then came up and closed. Then on Tuesday opened. Let's zoom in pretty much nicely to have a clear view. So Tuesday opened at close to the highs, took out Monday's highs and dump. So when I see this, immediately I saw this happen on Wednesday, that price has closed below Monday range, and I'll say to myself that okay, I want to see price come back and test 50% of this Monday range, since we did not aggressively dump below the lows. I want to see price come back and test the 50% of the range on Thursday, and you can see price did that open, test the 50% of the range, reject, also test the 50% of the weekly order block, which is this line here, and we saw all this sweet, easy, massive decline, dumping price, taking out old lows. You can see how after price rejected this old highs, which is a dot soup, took out this highs, and immediately the interest shifts from attacking highs towards attacking lows, taking out the liquidities. Now in this case, we're not just taking out the liquidities, we are breaking and closing below the lows. So you can see how we have analyzed this AUD from the 3-month charts to the monthly, to the weekly, and the daily, looking for entries. So now let's move to the hourly. Since this is a daily chart, no need to look at the 4 hours and go straight to the 1 hour to look for executions. So now executions on the hourly is where you look at time of the day. If you notice, I haven't really said much about time, and now on the hourly, where I want to do my executions, where I perform my executions, is where I want to consider time of the day. So time of the day is the sections of the day. Asian section, which starts the day, moving to the London section and the New York section. So my executions mostly are done in London section between 2 a.m. to 5 a.m. in the New York local time, which you're seeing here in E.T.C -4. Between 2 to 5, I want to look for entry. If I don't see, I skip till 8:15 till 10 a.m. to 10:30. So those are the time windows I look for entries. So on Thursday, you can see even on the 1 hour, after we rejected these highs on the daily time frame, take out the highs. Now price broke and closed below these lows here. After the sweep, break and close, price came back to premium again, taking out these highs, break these lows that brought us to this high, broke the low, and price came back to premium again one more time, tapping into this breaker here, this down close candle. Let me zoom in pretty much nicely so you can see this down close candle before this fake turtle soup, like this fake move above these highs, turtle soup, and aggressively slamming. Price came back to it, tap the breaker here once, then price moved down, came back again and liquidated these highs around 9 a.m. New York time on Thursday. After they took the liquidities here and closed below this candle on the lower time frame, that's where I took my entry as the more than one entry. Like the up close candle that liquidated this high is the more than one entry. On the 5 minutes, you will see the up close candle that took this highs and immediately price closed below them. That's where I took my entry here. And price moved aggressively to the downside. Price moved aggressively to the downside, taking out these lows. So I hope I've been able to make sense on how to analyze and how to look for your drawn liquidity, your higher time frame buys, and everything, all the way down to the executions. So let me show you something here. This is my X, this is my Twitter handle, and I want to bring your attention to the execution I took on that AUD trade. We are talking about the Let me scroll. Just give me a minute. Now this is GBP/USD. Give me a minute. All right. So this is AUD/USD. So this was the execution I took on AUD/USD around that price point. You can see the entry is 0.065998, and the entry here on trading view is what 0.065988. That was when I manually executed the trade, and you can see how it played out. So on X, this is the trade, and this was the forecast before the trade actually happened. This was what I was looking at, and this R here represents my target. So this is how I walked my way from the higher time frame all the way down to the lower time frame to get this beautiful trade outcome and execution. So with that said, I hope I've been able to share insights on how to navigate from your higher time frame all the way down to the lower time frame to look for what entries. So a quick recap: quick run through of this whole video is what know your higher time frame bias and narrative, and also the most important question to ask yourself on the higher time frame is, why does price move? So knowing why price moves is very, very important. Price moves only for two reasons. Reason number one, to take out liquidities above old highs and below old lows. And reason number two is to fill up imbalances in price, which is fair value gap. These pockets that were left behind as price was dumping aggressively, price will come back to fill them up at some point before continuing lower. So those are the two reasons price moves. Then moving on, you need to be aware of premium and discount prices. You need to be aware of key levels. You need to be aware of total soup or SMC, and also time. So thank you for watching to this very point of this video. I love you, my viewers. I love you, my subscribers, and I hope I've been able to cover your requests in the comment section. And also, you can reach out to me in Telegram, in X. If you need a 1v1 section, you can reach out to me. So thank you. With that said, good luck and good trading. Safe.